All right, welcome to the roundtable. Today is the 6th of August, 2025, and the presenter is me, Tom Nunemaker. We're going to talk about traits of traders and why they fail and why they don't. And I compiled some advice, tips, tricks, and stuff from several successful YouTube futures traders. So it's kind of oriented towards futures, but most of the stuff applies to any trader or really anybody doing gambling too. Really, it's all about risk management. So let's get started here. Just a regular disclaimer, Aeromir is not a broker-dealer, investment advisor. For educational purposes only. Options, futures, bonds, and currencies have risks, so look both ways before you cross the street, and for personal use only. Hypothetical and risk performance disclosures are standard. If you want to read them, just go pause the recording and have at it. It's pretty standard stuff. Attribution, these are some of the firms we work with. Um, because we're Ninja Trader ecosystem vendors, we have to have those two in the middle. There we are for that. So overview, we're going to talk about why most traders fail, what successful traders are actually doing, what Goldilocks is doing to kind of fit into that successful pattern, and then some live performance results. So first, who am I? I started Aeromir back in January of 18, but before that, Capital Discussions in 2014. And before that, I was a student and IT guy for Dan Sheridan for 6.5 years. Now, my first options trade was in 1982. I was in college delivering mail for the post office and going to night school. And one of my teachers at night was a market maker at the CBOE. He took me on the floor of the exchange twice to try and get a job as a runner, but bear market, Dow was like 1,200. Nobody's hiring. I tried twice, didn't work. So I finished my degree and joined the Air Force and did airplanes for 20 years. But my first options trades were back in 1982, so it's been a while. I've been programming since 74 when I was 14. My dad built a computer in our basement then. He's an electrical engineer at the University of Chicago. So I've been programming a long time, and I am a retired Air Force pilot. I do have lots of flying stories too, and those are kind of fun. So why do most traders fail? 90% of traders fail because they're overcomplicating strategies or drowning in indicators. A friend of mine down in Australia, I haven't heard from for a while, but he's got two PhDs in applied mathematics and cosmology, like space physics. And he always said, minimize the degrees of freedom, i.e., don't put too much stuff on your chart. Joe Ross was a big believer in this. He based most of the time had nothing on his chart except the open, high, low, close bars. That was it. And just keep the chart simple, so don't overcomplicate it. Poor risk management, risking too much per trade. And, that gets into like revenge trading too. So you take a loss, you want to get it back. Just over leveraging, like a lot of these prop firm accounts, like Apex $50,000 account, you can trade 10 mini contracts, which is a lot of risk. You can blow the account really fast trading that size. So you got to watch your risk management and emotional decision making. So again, the revenge trading after losing, we talked about that. And lack of patience, this is a big one. If you look at Matt Miller on YouTube, he's Trades by Matt. I think he's one of the more popular online futures streamers. He'll sit there for an hour, hour and a half before he takes a trade. He's just waiting for a good setup. And he's trading NQ'd. He's only trying to get generally 10 points. So he's just waiting for one of the patterns that he likes. So he's just sitting on his hands most of the time. So patience, patience, patience. And then we have a quote from Jade Cap. So Jade Cap on YouTube, he just took a $2.5 million payout from Apex. He had $150,000 accounts, 20 of them, and each account had something like 115,000 of profit in it. But it took him 49 days to get up to that point because Apex, you have payout limits for the first like six payouts, and the seventh one, there's no limit. So he took a pretty big one, but you'll see some quotes from Jade Cap on here. And he said, more tools create confusion, not clarity, which kind of goes with Daniel's thing with minimize the degrees of freedom. And information overload, you're always looking for the holy grail. And I've been guilty of that, just looking for the latest shiny thing to go trade. So the system hopping trap. Find a strategy, initial excitement, first losing streak, doubt sets in, abandon strategy, look for a better one. So, and then repeat the cycle. And I remember Dan Sheridan used to say, um, who do you think is going to be a better calendar trader? The guy that did it for a month or two and then gave up, or the guy that's done it for 1,000 trades? It's a lot of it is repetition and seeing the same things and patterns over and over again. So, find something that's got a good expectancy and stick with it. Um, so the overtrading death spiral. I was trying to get like a graphic of an airplane and a flat spin or something, but I couldn't get a good one. But so prop firm data. So this comes from this guy Arjo, Arjo, I think his name was. So he was a part owner in a prop firm, and they have lots of data that he was sharing. And one of them is successful traders. They don't take that many trades, 2 or 3 trades per day, versus the guys that fail are trading more, like 7 to 9 trades per day. So why does this happen? Impatience and boredom. You want the action, kind of like a gambler, right? You want that adrenaline hit, and you think, oh, this is a good trade, and you're not really systemized. It just kind of looks good. So another thing is you're trying to make back your losses quickly. So just increasing your size and try and make up for losses. No clear trading plan, so you're just looking for maybe some patterns that have worked in the past and treating trading like entertainment instead of a business. So you get depressed if you have a bad trade, you get super elated if you have a good trade. But a professional trader, it's kind of par for the course. It's like that book from Tom Hogarth, Best Loser Wins. So you got to learn to lose. Um, and shocking prop firm data. So successful traders, they generally had a reward to risk ratio of 2.5 to 3 to 1. And they traded again about 2 or 3 trades per day. And to pass evaluations took an average of 9 days. And their win rate was about 50% with proper reward to risk ratio. And I do have a tool at futures.aeromir.com called, let's see, reward to risk calculator. And you can put in any 1% you want, but it has some standard win rates. And you can see the green is positive expectancy. So if you have like a 2 to 1 or say 3 to 1 reward to risk ratio, you can have 30% loser or 30% winners and still be profitable. And the higher your win rate, obviously, the more profitable you are. Um, but even a 1 to 1, you need just basically a little bit above 50% win rate, and then you're positive. But you can put in whatever number you want. Like Goldilocks is about 57% right now. So we need oh, where is it? Break even occurs at exactly 0.75 to 1 with a 57% win rate. Okay, so back to this. So, failed traders, their reward to risk ratio is about 0.5 to 1 or worse. And they trade more. They trade 7 to 9 trades per day, and they take 5 to 7 days. So it's interesting. They take less time to pass because they're taking more risk. So that implies that they're blowing accounts and then they eventually pass them. And then the win rate is irrelevant with a negative reward to risk ratio. So you're going to have negative expectancy. So when you're trading like that, you will blow up accounts. And the brutal truth, even with 80% wins, a negative reward to risk ratio blows your account. And you can see that here. Even with 80%, if your reward to risk ratio is like 1 to 5, you're going to blow the account. All right. So here, management reality check, the math that humbles everyone. So account, if you lose 2%, you have to make 2.04% to get back to where you were. Down 5%, you need to make 5.25. Down 10, you have to make basically 11%, 20, 25, 50, 100. And again, I have a tool for this too. It's called the account recovery calculator. So it has all these standard numbers, but you can put in whatever you want. Say you lost like 37% of your account and you're trading, I don't know, $40,000. It'll tell you what your numbers are. So if you lose 37%, you're going to get from 40 down to 25,000, and you're going to need 58% to recover that. And you can see it gets progressively worse the deeper in the hole you get. So, because you have less money to work with, right? So if you go to 40,000 down to six, you need 566% profit to get back to where you were. So the idea is futures traders generally risk 1 or 2% of their account on any one trade. So then it's easy to recover. If you lose 2%, you only need 2.04 to recover that. Most traders risk too much because they want to get rich quickly. And a lot of futures traders see people like Jay Cap getting a $2.5 million payout. And they go, I want to do that too, like next month. Well, it takes a while. Like Matt Miller's been trading 7 years. I think Jay Cap like 14. So they don't do it overnight. So it's, again, with the patience, they don't understand position sizing. And I've got a tool for that too. I can show you real quick. This is actually a pretty handy tool. It's called Position Size Calculator. And what it does, you pick a symbol that you're trading, let's just say MNQ, and how much of your drawdown do you want to risk and what percent of that. So say you want to risk 10% of your drawdown or $250. And you look at the average true range right now, MNQ, let's say a 5 minute chart at 17.7. So you can actually put that in. And then how many average true ranges do you want to use for your stop? Let's say two, and your reward to risk ratio is say 2.5. Now you can trade three contracts and you're risking $212, which is under your 250. And if you win, you'll make 531. And if you have an actual entry price, and right now we're at 23,406. It'll actually calculate if you're long or short, what those numbers are, your targets for your stop and your loss. But the number of contracts it changes based on how much risk you're taking. So if you did like 1.5, oops, 1.5 ATRs, now you can trade four contracts. And then you can change this too. If you just want to do one, you can see what that would be. So you're risking $53 to make 132. So this shows how you can use ATR, which is a measure of market volatility, to help size your position. You move your stop losses when losing. So this is, again, you don't want to move the stops. You just, you have a stop for a reason. Just leave it there and don't treat trading like a business. So again, try to be unemotional about it. So some characteristics of successful traders. Risk management. So here's the Tom Hogarth. He's the guy that wrote the book, Best Loser Wins. In trading, unlike life, it's the best loser that wins. And you have to accept losses because it's part of trading. Again, there's the never risk more than 1 to 2% per trade. Patience, wait for high probability setups, and discipline. Honor your stops without hesitation. Learn to lose. And simplicity. Use simple, proven strategies. So again, don't overcomplicate things. I've seen people with charts that have tons of stuff on them, and you want to keep it simple because, say you have five indicators and two were long, two were short, one's neutral. What do you do? It starts making things kind of complicated. And consistency, trade the same way every day. So once you get something that works, just wash, rinse, repeat. Just keep doing the same thing over and over again. So the professional trader mindset, losses are a business expense, so you got to accept them as part of the game. Nobody wins 100% of the time. Focus on the process, not outcome. So again, you're waiting for high probability setups like Matt Miller, waiting an hour and a half for one 10-point NQ trade. Discipline, again, honor your stops without hesitation. Don't just move them away, just leave them there. Simplicity, simple, proven strategies, and consistency. Trade the same way. Okay, so the power of so what? Now what? So when things go wrong, and they will, so what? Accept that it happened. Again, don't get too emotional with that. And then the next question is, now what do I do? So focus on your response. So some examples. So what that I had a losing day? Now what can I learn from it? A lot of traders will journal what they did and write notes and everything. You can do that and try and learn from your mistakes so you don't repeat them in the future. So what? I'm in a drawdown. Now what's my recovery plan? And then So what summer trading is tough, it's less volatility, moves are usually smaller. What adjustments do I need to make? And then here's one from Matt Miller, quote, every trade he goes into, I assume the money has already left his account as a business expense. All right, so the winning formula, reward to risk. So with a 2.5 to 1 reward to risk ratio, you only need a 28.6% win rate to break even. Goldilocks right now is about a 57% win rate. So if you have 10 trades, 4 wins, and 6 losses, you have a profit. And the key is let your winners run and cut your losers quickly. But again, it depends on your win rates and all that, and your reward to risk ratios. And like Jay Cap says, your biggest lever isn't your strategy; it's your risk management, trade management, and psychology. So, so we have the Goldilocks Auto Trader that my trading partner Bug came up with. And why does it work? So it avoids overtrading and revenge trading. It's not emotional, it's a bot. It's not too cold, it doesn't miss good opportunities. It's basically waiting for a trend and a pullback, and then um, it applies to trade frequency. So again, the successful traders were trading 2 or 3 times a day. Goldilocks trades 1 to 3 times per day, mostly 1 or 2. The risk per trade is fixed, and we're not moving the stops or anything. It is what it is. It's not a complicated program or strategy. It's basically finding a trend and jumping on board, and then time commitment. So it's the strategy starts at 3:45 a.m. Eastern and goes to 3:21 p.m. Eastern. So almost 24 hours, or no, 12 hours, sorry. And it's a bot, so it's trading, while you're sleeping. Now, if you're doing this with a prop firm account, they want you to watch it. So they want you to be at the computer while it's trading. So you could just turn it on, like when you get up. But if it's your own account, you don't have to do that. So like JCap says, if you place a trade on a 4 hour time frame and don't look at it again for another 4 hours, maybe you don't even look at it again for another 8 hours. And that's kind of like Goldilocks. Again, it's sitting in the background. All you want to do is make sure that it's running, that NinjaTrader's got data and is just doing its thing. You don't actually have to touch it. It does all the trading. So it's built on successful principles. Oops, got back here. Where am I? There we go. It's a simple setup. There's no indicators on the chart. It's clear risk management. We define the stops and the targets at specific time windows. And the reason we start at 3:45 in the morning is the European markets open then. So gold is starting to trade. And we're trading the micro gold contracts. And we're only trading 2 micros, so we're not taking a lot of risk. Proven edge, it's based on market structure, and it's a repeatable process. It does the same thing every day. Again, there's no emotion in that. And JCap says the strategy that made me the most money has zero indicators, which kind of goes along with Joe Ross and Daniel's ideas of, keep things simple. So there's 3 pillars: a market structure. It identifies key support and resistance. It understands the market context, trending versus range bound. It waits for the structure to set up correctly. And then the second, timing and entry. It has specific time windows, which we talked about. It has clear entry triggers. There's no guessing. It just does it. And multiple time frame confirmation. Again, it's looking for trends in a little bit longer time frame. And then risk and trade management. Again, we use predefined stop loss and take profit, position sizing. Now we use constant 2 contracts for a $25,000 prop firm account with $2,500 of drawdown. But if your account's larger, you can trade other things. So, for instance, we have some prop shop trader $500,000 accounts with $24,000 of drawdown. So, in that case, we're trading one full gold contract. You don't have to trade just the micros, but you need enough drawdown to handle that. And the exit rules that remove emotion. So again, you don't have to sit there and watch it all day. The only thing you really need to do is make sure, and I reboot this, I use a VPS, I reboot the VPS, restart NinjaTrader before trading starts. and then everything's nice and clean. So I just have to make sure that NinjaTrader's getting data, that the strategy's turned on, etc., and you're, connected to your trading account, and then it should just do it. I don't even think it takes 15 to 20 minutes, probably more like 5 to 10 minutes maximum. Again, there's clear signals. You don't have to watch a chart, it's watching it for you. It works with day jobs. Again, you just have to check in a few times a day. And here's that note about prop firms require you to physically be at your computer when you're trading. So if you want to do it with a prop firm account, then technically you have to sit there in front of the computer and watch it. And I do have buttons on there to turn strategies on and off. Um, so if you want to go long or just short or both or just not trade at all, you can use those buttons in real time while you're watching the chart, but you don't have to. So again, risk management plan is built in, never risk more than 1 or 2% per trade. Always use stops, no exceptions. And that was an interesting thing from that former prop firm owner. He said that nearly half of the traders didn't use any stops. They would put a trade on and maybe they'd have a profit target, maybe they wouldn't. Another thing on stops, Bud, who develops Goldilocks, he kind of is a fan of Kevin Davey, who won multiple trading championships. And Kevin Davies' advice is don't put a stop on, or if you have to put a stop on, put it 5 to 6 times what your profit target is. And he won a lot of trading championships. A lot of times the market will pull back against you, hit like a support or resistance level, take out a bunch of stops, and then reverse back in the original direction. So um, that was Kevin Davey, but Goldilocks does put stops on. And you can have an optional daily loss limit. So if you have certain numbers that you don't want to exceed, you can put those in there. And performance. So these were May 1st to August 1st results. Again, about 57% wins. Average winner was a little bit bigger than the average loser. And we had a maximum drawdown of about 2,500. Now that was end of day drawdown, so intraday could have been higher. If you go to the futures website, futures.aeromir.com, and hit performance, and make that a little wider. This goes to a Google Sheet that I use to keep things updated. So you can see every single trade. We've been forward testing since May 1st. There's about 96 trades, and I updated the ones for today, or we didn't have any trades today, yesterday. Yesterday we lost 170. Yeah. But you can see here's the equity chart. And this was a technique that Joe Ross taught me is just do like a 30-day or 30 period moving average of your equity. And if the equity falls below the moving average, then just go to sim mode. And you can turn that on or off if you don't want to see it. But right now we're well above it. We're about $470 below the all-time equity high. And actually, on an end of day basis, we're only $171 below the all-time equity high. But this has all the stats and all the risk disclosures and all that stuff. But I try and keep this updated every day. So feel free to take a look at it and see, all the trades are all here. All right, so there's that. Okay, and then winning days. If we look at, now this is trade, so we had 55 winning trades, 41 losing trades, but this is on a daily basis. So almost 60% of the days we won. We did have 7 consecutive wins and 9 consecutive losses, which is pretty amazing because if you go, where's that tool of mine? Consecutive loss calculator. So 57.29 is actually our actual win percentage. So to lose 9 in a row, it's 1 in 2,115 times. So very, very unlikely, but we did survive it. A couple of the losses, if you look at that losing stretch, was right here. One was $20, another one was 58. Here's 140, 150. So they weren't all max losses, but still, it did, if you look at the equity, it did dip down here, but it recovered right away. And then it was kind of going sideways in this period. And then we looked at the market and it's been going more sideways instead of trending. So we changed the profit and loss targets around in here. And since then, it's just been slowly moving up in kind of a nice fashion. Okay, so again, we're surviving the summer doldrums. Last week I think we were up. This week, let's see, how are we this week? This week we're up. Let me just add these together. We're up $530 this week. Last week was here. So we're up 640 last week. So week by week, we're doing pretty well. And like I said, typically it's the worst trading period. Probably August is the worst. That's typically when a lot of traders go on vacation. And we did show the drawdowns, and it's interesting because Bud likes to test with over a year, and the year back test had about a 55% win rate, and our actual win rate's about 57%. So the forward testing is almost identical to the back testing, which is pretty nice. And again, it works on any account size. You can use a $50,000 Apex account or $20,000 live account of your own, a $500,000 prop firm account. It just doesn't matter what size the account is, unless you're getting into like the hundreds of millions of dollars. It's not about being right all the time. It's about being profitable over time. And Joe Ross used to say, get paid to trade. Um, so before you make another trade, you have a proven simple strategy. Don't keep it very complicated. What's your risk? I know option traders, they never really talk about this. It's more for futures and stock and maybe currency traders, the 1 to 2% rule. But option traders do tend to risk a lot more. So just keep that in mind that, if you do have losses, like, if you lose 10%, you got to make 11% to get back to where you were. Do you honor your stops without moving them? Can you handle 9 losses in a row emotionally? And I've seen systems that have, high reward to win rates and only have a 35% win rate. So you can easily lose five, six, seven, eight times in a row. So how are you going to handle that? Is that still okay? And are you trading like a business? Again, try and take the emotion out of it. Um, if you're going to have losses, just accept them. Don't get freaked out by them. And you will have wins, but again, it's not something to get super excited about. Like Casey Platt told me in the pit at the CBOE, when a trader made a lot of money, they typically first thing they do is pay off their house, but we're not trading with that size money normally. But that would be pretty exciting if you could do that. But most of the time, you're trading maybe one, two, three, $500 profit or losses. So it shouldn't be enough to affect your life. So what's next? If you like the idea of the Goldilocks Auto Trader, again, it's fully automated Ninja Trader strategy. I am in the process of porting it to Quant Tower, and I've had a few little glitches with Ninja Trader, like disconnecting during overnight, and Quant Tower's not. So I think Quant Tower's be a nice alternative. I'm still working on it. But right now it's only Ninja Trader, but hopefully in the next couple weeks it'll be also Quant Tower. Again, it's a 57% win rate, and the back testing with the updated P&L, the stops and profit targets, is more like 62%. And I do have a special pricing. Normally it's 425 a quarter, and I'm knocking 20% off for the first 50 people. So just go aeromir.com/Goldilocks. So what did we learn today? 5 critical things. The simplicity wins, complex strategies fail. So keep it simple. The KISS principle, right? Risk management is everything. Never risk more than 1 to 2% of your account on any one trade. Patience pays. Wait for high probability setups. Make one of the things sitting on your hands is a good thing. Cash is a position. So have patience and, wait for that setup that's perfect. Consistency beats perfection. Again, 57% win rate over a year plus, and all the live forward testing for the last 3 months confirms that with proper reward to risk is profitable. So you have an edge. And psychology matters most. Control your emotions or they'll control your account. So again, don't trade off of emotions if you can avoid it, right? Don't don't do revenge trading and don't get super overconfident. Like you hear about new traders, like, hey, they have a couple wins, they mortgage their house, quit their job. I'm going to do this full time, and then it turns out they have a lesson or two to learn. So the Goldilocks idea is not too aggressive, not too conservative, just right for consistent profits over time. And Tom Henley's with us. And Tom, you have been trading Goldilocks for a couple months now and passed two Bullinox 50K accounts, right?
Yes, just getting ready to make the third payment on two accounts. So actively trading Goldilocks for 2 months here. Passed the first account about 2 weeks ago. Passed the second account last Thursday or Friday. So everything has gone from the um, let's see what you can do process to Bullinox now being able to. It's not fully funded yet. Theirs is a three-step process, but it's to the point where if Goldilocks will continue to perform in a positive manner, I can start taking payouts. And then once I reach, like, I think it's 5,300 or 5,400, because these are both 50,000 accounts, then I will be able to switch to a fully funded account. But yes,
Right.
Goldilocks is doing a great job.
Right. And Jonathan asked, will everything be moved to Quant Tower? No, I'm going to keep the Ninja Trader one because that's the original one. It's still working. It's pretty solid. Quant Tower is just going to be an alternative. You'll be able to choose which one you want to use, or you can use both. Doesn't matter. You can use Quant Tower or Ninja Trader, and the free version of Quant Tower is fine. Um, that includes trade copying and basic charting and trade management. So you can, I use Quant Tower when I'm trading with Goldilocks. If I have a position on with Prop Shop Trader, because Prop Shop Trader won't let you connect from Ninja Trader. So you have to connect from something else because they own TickBlaze as well, and they consider Ninja Trader a competitor. So that's why I log into Quant Tower on my VPS to trade manually or to monitor trades that Goldilocks has taken through ETP trade copier. It's kind of complicated, but bottom line is Quant Tower, you don't need a paid version. Basically, what will happen is once I'm ready to distribute it, you'll get three files that'll show you a folder to put it in, and then it just shows up on the strategies in Quant Tower. You set the settings with like a gear icon, and then you turn it on. So it's pretty simple. I've got it working, but it's not validated yet. I haven't been able to check if the Ninja Trader version and the Quant Tower version are getting the same trade. So I'm pretty new to Quant Tower programming, so I have to figure out how to do the back testing and get historical trades in Quant Tower that I can compare to Ninja Trader. And once they're identical, then I'll release it. But it shouldn't be too much longer. And reward to risk ratio, when the market's trending, we use a 2.5 to 1. Right now, it's pretty close to 1 to 1, a little bit under. And you do not need a VPS. However, I found a VPS simplifies your life, especially if you don't live anywhere near Chicago. And the farther away it is, the more latency it has. So if you're in Europe or Australia or something, that's way more important to have a VPS in Chicago than say if you live in Atlanta or Dallas or something. But I live in Colorado, and it's still not that far away, speed of light. So, and Goldilocks uses 3-minute micro gold. So even if you're off, a few milliseconds, or that's not that big of a deal because it's 3-minute bars. So you don't have to have super high latency. But I do like the VPS concept if you're traveling, especially, if you're trying to connect to your trading stuff from a laptop with all your trading stuff on it. Now you're kind of limited to the hotel Wi-Fi speed. But if you have a VPS, the only thing you're using the hotel for is to do screen, mouse, and keyboard inputs, but all the trading and data and all that stuff is on the server. So it's pretty fast. And another thing with the VPSs is, don't get the super small ones like the 8 gig of RAM. My trading partner Bud had I think it was a Breeze Host one, and he was getting 100% CPU spikes on it, and that was just with running NinjaTrader, Goldilocks, and maybe RTrader Pro to monitor it. So Make sure you have probably 16 gig of RAM is safer. I'm running a Chart VPS with the 32 gig of RAM and 4.4 gigahertz, I think it's 8 core processor. And that thing's like, less than 8% CPU and RAM utilization all the time. It's just not really working at all. So to get something with enough horsepower, if you're going to do a VPS, it's pretty important. And again, just a summary for Goldilocks. It is designed for beginners and a 50K prop firm account that when Bud's designing systems, he's trying to get it to $2,500 drawdown or less annually. And if you look at the current Goldilocks with the current stop and profit targets, I think it's something like $2,100 drawdown over the last year. And then again, the performance, you can go here or just go to futures.aeromir.com and it's on that front page. Again, you can also go airmere.com/Goldilocks and also get to the information page. Um,
Jonathan's got one more question for you about updating.
oh yeah, are you constantly updating the strategies or changing the settings? Um, we do update it occasionally, but not very often. And that's kind of one of the design goals that Bud has was try and have it so you're not changing things too much. The only thing we changed really were the stop and the profit targets as we detected that the market was kind of going into more of a sideways on more of a daily basis. So, we were finding that the 500 tick profit target, you would get in a trade and it would make money. It would go up maybe 100, 200, 250 ticks and then reverse. And then you give up a lot of that profit or even all of it and go negative. So, we decided to lower the profit targets, and that's been working out pretty well. But the whole idea is that we don't have to change it very often because, again, it's a fairly simple strategy. You're looking for a trend, you're waiting for a pullback, and then you get in line with the direction of the trend, which is kind of like Joe Ross. He has a trader's trick entry. It's kind of the same idea. And I do have some training on that that's free if everybody wants to go there. Go to futures.com, futures.airmere.com, and go to the library. And I've got a few educational things here. Trader's Trick entry is the Joe Ross entry. We're basically, I wonder if I can make this work here. Do I have Zoom loaded? Zoom it. Oh, here it is. Zoom at 64. See if this works. Nope, didn't work. Well, basically, maybe I can draw on the screen. So the market's going up, it's in a trend, it pulls back and then comes up here. So what Joe will do, um, he's doing it with bars. So I say he has some bars going up and then a couple of bars going down. And then if after he has enough room between the swing high and the high of this bar, he'll on the next bar he'll try and get long one tick above this one. And if that doesn't get filled, the market goes down a little bit, he'll try and get long here. And if that doesn't work, he'll try and get long here and then boom, there you go. But after about 3 or 4 bars, then he gives up on it. So that's kind of the trader's trick entry. And um, I did a training video on this a while ago. But that's kind of the idea of Goldilocks, just on a longer time frame. It's looking for a trend and a pullback and then enter in the direction of the trend. And then some other things, Matt Miller, he's Trades by Matt on YouTube. He's got a thing on how to use order blocks and the wick test, which I actually like the wick test quite a bit. And then George Dean from Micros Traders did something on his break levels. And there's an introduction to futures prop firms if you're new to all this. And then there's a bunch of books too. So, feel free to look at those. But the trader's trick entry is kind of the same idea that Goldilocks is using, that you're looking for a trend, looking for a pullback, and then off you go. So anyway, that's about it. It's a fairly simple auto trader. It's working pretty well. Again, if you have your own account and you want to put in, say, 20,000 with a $2,100 or even $2,500 drawdown, you're looking at about a 10, 12% drawdown. So if you look at that uh, account recovery thing, if you're looking at, say, 12%, then you have to get 13.6% to get it back. So if you started out with a $20,000 account, it would go down to, let's see, 12%. go down to 17.6, and then to get back to 20, you'd need a little bit more than 12. So that's what I recommend. And if you look at the performance page, I do have a sample $20,000 account. So in the last 3 months, it would have been up about 26% over 3 months, which is pretty good return. It's about 100% a year, assuming it could do that for the next 3 quarters. And that's, with again a $2,500 drawdown. So that's, 20,000. It's typically about 20,000 of profit over a year with a $2,500 or less drawdown. That's kind of the design goal for Goldilocks. So that's about it. I don't see any more questions. So thanks everyone for coming, and thanks Tom for with your results. It's really great to have somebody following Goldilocks and making money.
Not a problem at all. Let's see. One quick question here, Charles. That is
Oh
Victor
yeah,
Papa Sierra,
right. A VPS. So you could go to like
virtual
um,
private server.
there's a couple of them. I have a resources page, trading resources. So virtual private servers, you can use BreezeHost, Chart VPS, or Quant VPS. And Quant VPS is giving Aeromir people a 20% discount if you use the code Aeromir. So if you click on that and go to Quant VPS, you'll get 20% off. And Jonathan's interested with his own money overseas. Yeah, it's pretty easy to set up. Again, since you're overseas, I would definitely recommend one of these. Like if you go to BreezeHost, go to hosting, futures trading. I would avoid this small one. Get a little bit bigger one with this has 12 gig of RAM. But you can look at the other ones like I'm using Chart VPS, and I've got the let's see, where is it? It's this Alpha series. I've got this one, and I think I pay 170 a month. They had some offer for like 5% off or something per month. So I'm paying 170 a month for this. But this thing's a beast. It's 8 cores, 4.2 gigahertz, 32 gig of RAM. And actually I don't think I have it running right now, do I? No, let me just show it to you. Chart VPS. Okay, here it is. So if I look at the system information, this is for that Alpha 3 server. You can see it's got 8 cores, 4.5 gigahertz roughly, 32 gig of RAM. And then the other thing I like to look at is the task manager. And this is with all these strategies running. It's using 13% of the RAM and 6% of the CPU. So it's really not doing much. I also, now this is interesting. There's a performance thing called Passmark. And let's see if I have some results with that, if I can find it real quick. My Snagit library. Okay, here it is. I'm going to pull this over. All right, so this is my local computer. I've got 128 gig of RAM, 16 core Ryzen processor, and let's see, where's the library at? Okay, here we go. This one is, which one was this? Can't remember which one it was. Thought I had some labels on these. Okay, this is that Chart VPS Alpha Mark III server. It's in the 92nd percentile as far as system performance. So this thing is very quick. And as far as NinjaTrader, the way it uses system resources, you want to focus on CPU speed and RAM and number of processors. So the way NinjaTrader works is multi-threaded. So each time you have a new symbol, it opens up a new thread. So we're trading with simple price pattern, which is you also get that with Goldilocks. NQ or MNQ, ES or MES, and GC or MGC. So three symbols. So you only need 3 cores. This is kind of overkill with 8, but the I'm very, very happy with it. So on any server that you get, make sure you have at least probably 12 to 16 gig of RAM, like this one would be nice, and decent processor speed. Um, so just be aware that generally the small ones with 8 gig of RAM, two cores, if you're running three symbols in NinjaTrader, this is going to be a problem. That'll start affecting performance. So just be aware of that. And again, if you're overseas, definitely get a VPS that's located in Chicago. And I remember the guy with what was the name of that one? Um, Connor. He had some auto trader on YouTube, but they also have a VPS service. He's in California. When he started using a server in Chicago, he noticed he was getting better fills on his live account. So just something to consider as far as a VPS.
No, Charles, it does not. You have to remote in to the VPS and then you can run Task Manager on that.
Correct. So this is the VPS, and if I right click on here, there's Task Manager for the VPS. If I do it just on my local desktop, then it looks like this. So I'm using 38% of 128 gig of RAM. So that's a lot. And then another question, when will the Quant Tower system be ready? Um, it's not, well, I don't know if it's cheaper. I mean, Quant Tower is free. NinjaTrader is also free, but you can't place trades on it. So if you don't have NinjaTrader, I bought a lifetime license years ago. You can get like a prop firm account like Apex or Bullinox or something for like 15, $20 and then give you a NinjaTrader license. So you could do it that way, but Quant Tower out of the box is free. So again, I have it running, but I haven't validated that it's actually taking all the correct trades yet. So it's probably going to be a week or two before I actually figure it out and get ready to release it. But it should be pretty soon because I want to start using it too. I mean, I use Quant Tower for all my manual trading, like here, and you can see they have this copying. They call it beta, but it works fine. And you set it up by just I give like a name. So these are two accounts. Which one's the leader? And then you can just start adding more children to it and copy all you want. The one thing that I did notice with this guy is you can duplicate a chart and have multiple charts up here, but each chart is kind of separate on what account it's linked to. So if you want it linked to a different one, then you have to individually change it for each chart. NinjaTrader, on the other hand, if you have a chart like this and you duplicate it in the same tab, everything, all these tabs that are open are all linked to this one chart trader. So if you change the account here, it's going to change it for everything that's on here. So Quantar is a little bit different that way, but it's fine for manual trading. I use it all the time. And then you can keep track of your open positions, your working orders. If you need to close them, you can just select them, right click and close them. And yeah, it works really well. And again, I've got the cumulative delta, which is a paid thing, but you don't need that. You can just do a basic chart with no indicators, and that's all free. I think you can even put one indicator on a chart with the free version. So that'll be exciting once the Goldilocks is ported over successfully to Quantower. But again, I don't think it's that far off. I've got about 1,500 lines of C# code, and it's working and it's taking trades, but I still have to validate that it's taking the right trades or not missing trades. So with that, I think that's about it. So thanks for coming. Thanks, Tom, and we will see everybody next time.